Hey, I'm Gene Goldman, and today is Monday, August 29th, and here's a look at the week ahead. As promised, we heard from Jay Powell on Friday at Jackson Hole, and the stock market was clearly disappointed. There was all this hope that Jay Powell would allude to a so-called pivot where he might suggest the Fed could stop rate hikes or even cut rates early next year. This wasn't the case. Our three key takeaways from this meeting: number one, rates will continue to move higher. Number two, the economy is slowing, but still strong enough, especially the labor market, to bear these hikes. And number three, the Fed will remain very data dependent. So let's talk about those last 2 points: economic strength and data dependency. The Fed gets a ton of data before the next Fed meeting on September 21st. The three biggest: August CPI and August PPI in the middle of next month, and then non-farm payrolls that come out this Friday. Let's talk about that report. Why is that report so important? Well, the Fed and the markets believe the labor market is strong enough to avoid a recession, or at least keep us in a mild recession. The last payroll report was extremely strong. Also, the payroll report is an important report because it's the first look at the prior month's economy. What do we expect? Well, about 300,000 payrolls. It's a slowdown from July's 528,000. We also expect the unemployment rate to remain unchanged near 3.5%. The reason for these is that if you look at jobless claims, you've only seen a modest rise in jobless claims, and this suggests a slight increase in layoffs. Although this report should be less than July's, it's still going to be very strong from historical standards. We also expect a slight moderation in average hourly earnings. And then overall, the key takeaway from this report is that it's an important data point for the Fed to help decide if the Fed will raise rates by 0.5% or 0.75% at their next meeting on September 21st. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and see you next week. Thank you.